Hi friends, Ashton here, your home loan girl. Have you ever heard of a 2-1 buydown? It's a popular tool that can lower your monthly payment during the first 2 years of your mortgage loan. And today, we're breaking it all down. I'll explain how 2-1 buydowns work, their pros and cons, and whether they might be the right choice for your home buying shopping experience. Let's get started. First, let's define what a 2-1 buydown actually is. A 2-1 buydown is a mortgage program that temporarily lowers your interest rate for the first 2 years of your loan. Year 1, your rate is reduced by 2%. Year 2, your rate is reduced by 1%. Year 3, to the end of your rate term, the rate returns to the original fixed rate that you locked with. So for example, if you get a 6% rate, Year 1, it's going to be 4%. Year 2, it's going to be 5%. Years 3 to the end of the loan, 6%. Who pays for it? The buydown is typically funded by the seller or builder as part of your closing costs. Curious about how a 2-1 buydown could work for you? Hit that subscribe button for more tips to make your home buying journey easier. Let's take an example to show how a 2-1 buydown affects your payment. If your loan amount is $300,000 and you've got a fixed rate of 7%, Year 1, you get a 2% reduction, 5% interest rate. That is $1,610 monthly payment for your principal and interest. Year 2, you've got a 1% reduction to a 6% interest rate. That payment would be $1,798. Year 3 onward, the interest is $1,996 for your principal and interest monthly payment. Pro tip: the difference in payments for the first 2 years is prepaid at closing and held in an escrow account to supplement your monthly payment. Here's why buyers love 2-1 buydowns. You've got a lower initial payment. The reduced payments in the first 2 years can help you ease into homeownership. It's great for transition periods. If you're expecting a raise, a bonus, or other financial growth in the next couple of years, this can make the transition smoother. And then there's seller incentives. In many cases, sellers offer the buydown as an incentive to help their home stand out in a competitive housing market. Save this video so you can revisit it when you're considering whether a 2-1 buydown is the right fit for your home loan. While 2-1 buydowns have some great benefits, they're not for everyone. Here are a few things to keep in mind. The first, it is a temporary savings. The payment reduction only lasts for 2 years, so be sure you're comfortable with the full payment starting in Year 3 in case interest rates don't go down and don't allow you to refinance before Year 3. Second, there's a higher cost to the seller. The cost of the buydown is paid by the seller typically, which could mean less wiggle room for negotiating the purchase price. Third, it's not always available. 2-1 buydowns aren't offered by every lender or on every loan type, so check with me first to see if it's an option for you. So how do you know if a 2-1 buydown is a good fit? It's great for buyers who expect their income to grow within the next 2 years, need time to adjust to a higher payment, they're working with a seller willing to cover the cost. This may not be for a buyer who is already stretching their budget to afford the full payment, or a buyer who prefers a lower interest rate over the entire life of the loan rather than just a temporary reduction. As your lender, I'm here to guide you through the pros and cons of a 2-1 buydown and to help you determine if it's the best fit for your financial goals. I'll provide a side-by-side comparison of the 2-1 buydown and other loan options. I'm going to work with your real estate agent to negotiate seller-paid incentives. I'm going to make sure that you are fully prepared for the transition after Year 2 and reach out when it's time for us to refinance and keep your payments as low as Year 1 or Year 2. If you have questions about the 2-1 buydown or other creative loan options, reach out to me directly. I would love to help you explore what works best for you. 2-1 buydowns can be an incredible tool for the right buyer. They offer flexibility and savings during the first 2 years of your loan. With the right guide and planning, you'll feel confident in making the best decision for your situation. If this video helped you, don't forget to like, subscribe, and share with someone else who's navigating the home buying process. Thanks for watching, and I'll see you on the next video.